If you have questions about what's happening with the local market, there's nobody better to ask than Chuck. So let's start with your background and how you got started in all this.
Sure. I got started 26 years ago. So I've been doing this for a while and have the past 4 years, 3 years have my own company, Motto Mortgage Midwest. A business partner of mine and I purchased that. And so we've helped thousands of buyers and have, a lot of experience with working with people and get them in the right spot. And every loan we have, there's always something a little bit different. It's always unique and it has its own unique sets of challenges. And so we'll work with buyers to make sure we're getting them in the best product, get them the best rates, and make sure ultimately we're getting them to the closing table.
I mean, what are the things that you talk about and help them with months in advance?
We will start out with a conversation normally about credit because that's the one most people are either unaware of or it's just sort of more of the unknown. And so we can either pull credit for them early, and if there are issues, work through it with them, or just give them some tips on how to continue to improve their credit score. Income, a lot of people, I've been talking with people who are not yet graduated from college, but they're about to be. And so we'll talk about, what we need to look for as far as contracts, employment contracts, things like that. And then assets, where their money should be and the best way for us to be able to document those funds. So a lot of conversations we could be having.
Sooner the better. You are a mortgage broker.
Yes.
And what's the difference, the advantage of working with a mortgage broker versus a bank?
Sure. So I sort of break it down into three things. There are banks that are considered retail lenders, and that's your Wells Fargos, your U.S. banks, your Chases, the major companies. And what that means is you can walk in there, you get a loan, they set their own rules, so you have to meet whatever their guidelines are. There's correspondent lenders, which are banks and some independent mortgage companies that lend you their money, but on the backside, they're actually selling it to an investor. But still, they set their own rules. They put in what's called overlays, which means they are putting in an extra layer of rules to protect the bank. We as a mortgage broker work directly with these investors. So we sort of cut out the bank piece of it. We work directly with the investors. We can shop for you to get you the best rates that are out there. What a lot of people won't know, the best examples to show the difference is you may go to a bank and it's very common for them to say, I can't get you into this loan because your credit score is, below a 620, okay? When in reality, FHA will allow you to have a 500 credit score, okay? But the bank doesn't want to lend to somebody that's that big of what they consider a credit risk. We have investors that don't have that overlay, and so they will work with you. It may mean more money down, but they will still work with you. They'll still evaluate things, but they are going to meet the investor guidelines. Another one, I'm actually working on it right now. It's almost $1 million loan. The borrower is a veteran, so he could do 100% financing, but some banks up to that high of an amount want to see at least 5 or 10% down. So they might have an overlay that says you can't do 100% financing on that high of a loan amount, whereas we have investors that just follow VA's guidelines and allow you to do a jumbo loan at 100% financing.